Member Engagement Manager at Lincoln's Inn. Thank you for coming along to our Junior Members Committee event this evening on good financial management for pupil barristers. The talk will be delivered by Mason Bloom. Mason is a partner at Levene Chartered Certified Accountants based in West End of London and jointly heads up the Specialist Barristers Unit at the practice. They act for over 2,000 members of the bar, from pupil barristers to QCs, and they've been providing barrister specialist services for over 50 years and know and understand the business very well. In his spare time, Mason enjoys cycling and scuba diving and spending time with his dog, Scooby-Doo. The presentation should last just under an hour, and there will be an opportunity to ask questions at the end. So please do use the Q&A tab on the Zoom banner for this rather than the chat function. Emma and I will be directing questions over to that, and Mason will be picking questions from the Q&A tab at the end. On behalf of the Inn, a special thank you to Mason, who will be speaking at this event. I'm now going to pass you over to him to start the presentation.
Clara, thank you for your kind introduction. Okay. As an aside, just before I start my presentation, I was thinking earlier today, what could be worse than having to listen to an accountant drone on about accounting and tax on this rather sort of grey, wet and miserable lockdown Monday evening? And then it occurred to me I could be a solicitor. My name's Mason Bloom. I'm a partner at Levene Chartered Certified Accountants. My presentation today will cover the entity regulation and alternative business structures, the 4 taxes that are relevant to you as self-employed barristers, how the self-assessment tax regime works and your responsibilities regarding record keeping. I'm going to touch on HMRC's new tax initiative, Making Tax Digital, and also cloud accounting. I'm going to explain how your barrister income and expenditure accounts are prepared, how your tax is calculated when it falls due, and also touch on good financial planning and organisation. So a few years ago, the Bar Standards Board introduced new rules whereby barristers who could only historically trade as self-employed individuals are now able, if they want to form a limited company, a partnership, or a limited liability partnership. And these vehicles for trading are called alternative business structures. For all of my clients and my pupil barristers, at the moment, they are all trading as self-employed barristers. I do have a few clients that have set up separate businesses providing legal services, so they have set up an alternative business structure, but I don't have any barrister clients at the moment that have incorporated themselves as limited companies and are members of their chambers, with their limited company being their vehicle for trading. So for all of my pupil barristers, I'm assuming you all will be self-employed and trading as a self-employed individual going forward. And the whole of this presentation is based on the premise that you are going to be self-employed barristers. The first tax that is relevant to you as self-employed barristers is Class 2 national insurance. It's a flat rate tax. It's currently just over £3 per week, and you pay that once a year when you pay your tax each January, and you are liable to pay this tax from the point you are deemed to commence your self-employed trade, which is from the beginning of your second 6 pupillage. Class 2 national insurance gives you entitlement to a state pension and also maternity allowance. Hopefully you won't need any other benefits. You also need to register for self-employment, and you can only do that within 28 days of commencing your second 6 pupillage. The second tax is VAT. It's a fairly complicated tax, but to give you a brief overview of the main points, registration is voluntary or compulsory. It's compulsory if your turnover exceeds, your fees received exceed £85,000 in any rolling 12-month period. So you do have to register prior to exceeding that threshold. If for any reason you fail to register once you've gone over that threshold, then it is a hugely financially punitive mistake to make. Unfortunately, I had an occasion where I had a very successful junior barrister who was totally sort of engrossed with her professional work and had totally missed the point about registering for VAT, and she was stung by having to pay over 20% of her turnover, over 85,000, that she had received prior to registering for VAT. So it's a hugely financially punitive mistake to make. I wouldn't want any of you to make that mistake. When you do register for VAT, there is a date that you have to specify on the VAT registration form that you want to be VAT registered from, and you just need to make sure that your clerks do start charging VAT from the date that you've requested to be registered for VAT from. Alternatively, you can register voluntarily for VAT at any point in time. It may be that your clerks, when you start your second sixth, they may ask you to register for VAT. They may leave it until hopefully you become a tenant, or they may leave it entirely in your own hands. So you just need to make sure, as I said, you register prior to going over that threshold. Once you are registered for VAT, your clerks will charge 20% VAT on top of your fees, and you are required by law to complete and submit a VAT return form on a quarterly basis. That VAT return form will detail the VAT that you've collected on behalf of the government when you've received payment of your case that had VAT charged on it. And then you would have to calculate the VAT that you've incurred on your various business expenses during that same quarterly period. And you offset the VAT you've incurred against the VAT you've collected, and you pay the net difference over to HMRC. Those VAT return forms do need to be filed on time and correctly, otherwise you're liable to various fines, penalties and surcharges. And you do need to keep adequate documentation of how you've arrived at the figures in the VAT return forms, as you are open to a VAT inquiry by HMRC at any point in time. The scheme that I have just described for VAT is called the standard scheme. There is also a separate scheme for VAT called the flat rate scheme, whereby rather than deducting the VAT that you've incurred on your various business expenses against the VAT you've received, you just pay over a flat percentage, which currently is 16.5% of your total receipts. We wouldn't recommend you joining the flat rate scheme for VAT, although administratively it's slightly more simpler to file those VAT returns. Financially, it is much more disadvantageous to you from joining the flat rate scheme. So we would recommend that all of our barrister clients join the standard scheme for VAT. There are a number of advantages of registering for VAT. The first advantage is there may be an initial cash flow advantage when you first register for VAT. You can actually go back 4 years prior to the date of VAT registration and claim back VAT on any assets that you've purchased for your business. So if you've had to buy a wig and a gown, a desk, a chair, a computer, laptop, iPad, then providing you've got the VAT receipt and you're still using that in your business going forward, you can claim that VAT back on your first VAT return form. So there may be an initial VAT refund on your first VAT return. For some businesses, it helps that you're VAT registered. It makes your business look more established than it actually is. And for some barristers, it avoids non-recoverable VAT problems between barristers that operate on the revised advocate graduated fee scheme. There are a number of disadvantages of registering for VAT. The main disadvantage is the additional administrative burden of having to complete quarterly VAT return forms. Either you're going to have to submit those forms yourself, get a friend to help you, or pay an accountant to do that. Also, for barristers that carry out work for private individuals, once you are VAT registered, you are 20% more expensive because private individuals can't reclaim the VAT on your fees. So some sets will ask you to delay registering for VAT so you're a bit cheaper to your end client. And as I mentioned, if you do file your VAT returns late, there are penalties and surcharges. Effectively, in April 2019, HMRC started their new tax initiative, which was called Making Tax Digital, and it's their flagship project. And their first tax that that this affected was VAT. So Making Tax Digital for VAT came in from April 2019. What that means is, if you are VAT registered and your turnover is less than £85,000, you are able to submit your VAT figures directly on HMRC's website. Once your turnover exceeds 85,000, you fall into the Making Tax Digital for VAT legislation. And what that means is you are legally obliged to maintain digital accounting records, and you have to submit your VAT return from your digital accounting software, and that accounting software has to be compatible with HMRC's systems. So you will effectively have to kit yourself out with a bit of digital accounting software to be able to submit your VAT returns to HMRC. From April 2022, all VAT registered businesses, even if their turnover is below 85,000, will also have to comply with the Making Tax Digital for VAT legislation. There are a couple of solutions that would assist you in complying with that legislation. For some clients, if you want to keep a record, Chambers will keep a record of your receipts, and you can download that into an Excel spreadsheet. And if you keep a record of your business expenses in that spreadsheet as well, you can use relatively inexpensive bridging software that will link the figures in the Excel spreadsheet to a VAT return to HMRC. And that's a fairly sort of simplistic way of filing your VAT returns. A more of a robust way that we recommend to our clients is using cloud accounting software. There are a number of software providers on the market. We use software called Xero, which is spelled Xero, for all of our clients. The way that works is you can actually link up your billing system at Chambers into your Xero software. So it will bring in all of your fees received on a live daily basis. And then you can set up a data feed from a business account directly into the software. So it will bring in all of your transactions on a live daily basis. You then have to post the transactions within the software, and the software will calculate your VAT return figures, and then you can submit your VAT return figures to HMRC. You can also link up other software called Receipt Bank, whereby you can take photos of any expense receipts, and it keeps a backup of that receipt in the software as well. So it ensures you comply with HMRC's regulations. Either you or your accountant can maintain those records and do that bookkeeping. So your accountant, if they are logged into your software, can have visibility on what's going on with your business in a real-time manner. So it's a very, very good piece of software that we recommend to our clients. Also wanted to mention, you can go back 6 months prior to the date of VAT registration and claim back VAT on any goods or services purchased for your business. So if by the time you register for VAT, your chambers have been charging you VAT on their clerk's fees and contribution rent to you, then you can go back 6 months and claim that VAT back. You can also, you are legitimately allowed to claim back if 100% of the VAT that you incur on a suit they are 2 separate taxes, both based on the profits from your self-employed barrister trade. They're calculated separately, but paid together. The only times during the year that you pay these 2 taxes are on the 31st of January and the 31st of July each year. And for most barristers that are starting their second 6 pupillage in March or April of this year, the first time that you will pay these 2 taxes are on the 31st of January 2023. And I'll come back to explain how that tax payment works a bit later on. I'm sure most of you are aware that the financial year runs from the 6th of April to the 5th of April each year, and you are required by law to complete and submit a tax return form by the subsequent 31st of January. If that tax return form is filed literally a second late, HMRC will hit you with a £100 penalty, and those penalties do increase significantly over time to the point where they will start charging you £60 a day if it continues to be not filed. I wouldn't want any of my clients to file their tax returns or their VAT returns late. It does put your head above the parapet for a potential inquiry if you don't deal with your tax affairs on a timely basis. The actual tax return form itself at the back will be the self-employed pages, and they will detail your income and expenses from your self-employed barrister trade. Hopefully, some of you will have other sources of income aside from your barrister income. So you may receive bank interest from accounts, you may own a few shares and receive some dividend income. You may even own a property or rent a room out in a property. So all of those sources of income will be captured in your tax return form. Likewise, if you make any charitable donations via gift aid or pension contributions, they attract tax relief, so they're also detailed on your tax return form as well. Once your tax return form has been submitted to HMRC, and we file all of our clients' tax return forms electronically, you will have your own online personal tax account with HMRC, so you will be able to access that. You'll be able to see that your tax return has been filed, and hopefully the liability that you have declared that you owe, you've actually paid that. So hopefully the statement of account on the system should come back to 0. The system is based on one of self-assessment. You are effectively advising HMRC what your income, expenses, profit, tax liability is. The system would be fairly open to abuse if they didn't inquire into taxpayers' returns on a random or deliberate basis. And it is highly likely that during the course of your career, you could potentially face one inquiry. We always prepare our clients' accounts and tax returns on the basis that that could happen. Each year, you effectively have to prepare barrister income and expenditure accounts, and the figures from those accounts slot directly into the self-employed pages of the tax return form. There are 2 methods in which your barrister income and expenditure accounts can be prepared. The first method is called the cash basis, and your income is recognised for tax when you've received payment of your case. So that's good. The second basis is called the earnings basis, and the point at which your income is recognised for tax is accelerated to the point where there is a value to your work, even if it hasn't been billed. The rules are, if your fees received, excluding VAT and including any taxable element of your second six pupillage award, and I'll come back to explain how the pupillage award is taxed fairly shortly. If that is below 150,000 in your first year, which for most of my pupil barrister clients, that is the case. I do have a few fortunate barristers that do earn more than 150,000 in their first year. Then you can join the cash basis, and you can remain on the cash basis until your fees received exceed £300,000, excluding VAT in an accounting year. And then you have to go on to the earnings basis the following year. I think there is a common misconception at the bar that when you move from the cash to the earnings basis, you suddenly get walloped with a massive tax liability that you haven't had the cases, the income in to pay that tax. That's not quite how it works. And I say to my clients, there's things to worry about in life, and moving from the cash to the earnings basis is definitely not one of them. Effectively, when you do move from the cash to the earnings basis, any additional profit that falls to be taxed is actually spread over 6 years. Once you sorry, let me take a step back. The worst case scenario is if you do exceed 150,000 receipts in your first 12 months. What that means is you are not only taxed on the cases that you've received payment for that year, you are also, on top of that, taxed on the value of your aged debt at the end of your first year as well. So that would crystallize a really high tax liability in your first year. So I would advise all my clients, if their turnover is anywhere near 150,000 towards the end of their first accounting year, I would delay paying some checks into their account to just keep you below that threshold. Okay, so assuming for most of you, your accounts would be prepared on the cash basis. In terms of your income that is taxable on the cash basis would be any pupillage award that you receive in your second six onwards. Any pupillage award that you receive in your first six is not deemed to be taxable. Likewise, if you receive any guaranteed earnings in your second six and you receive a top up on that guaranteed earnings, so income that you get to keep, then that would be taxable income as well. Some of you may have actually received an advance or a drawdown of your pupillage award prior to you starting your first six pupillage. So the way that is taxed is dependent on how your actual pupillage award is taxed in full. So, for example, if in total for your first six, your pupillage award was £20,000, and in your second six was £20,000, so a total of a £40,000 award, and you received £10,000 of that award as an advance, a drawdown of your pupillage award, and then received the remaining balance, the 30,000, and that was split equally over the 12-month pupillage, then effectively half of the pupillage award that you are receiving is part of the second six pupillage award. So half of that £10,000 would be taxable, and effectively £20,000 of your pupillage award would still be taxable in your second six. And some chambers, if you're lucky, they do weight more of the pupillage award into your first six rather than your second six. So that does give you an advantage in terms of how much tax that you pay on your pupillage awards. On top of your second six pupillage awards, you'll be taxable on any cases that you receive payment for. And if you do any other work for any other barristers, then when you receive payment for that work, that would also be taxable as well. I sort of glossed over a slide, and it's to do with record keeping. HMRC expect all taxpayers to keep sufficient records of their income and expenditure. So what I would recommend is when you receive your bank statements electronically on a monthly basis, is just to make a note of any receipts on the bank statement if they are not from your trade as a barrister. So it may be that some of you receive Christmas or birthday presents from family and friends, or gifts from parents. You should just make a note of what that actually is on the bank statement. If it's not clear, it's just very difficult if you're subject to an HMRC inquiry and you have to go back and double check what, well, they would actually have a look at all your bank statements and add up the receipts and compare that to what you've declared as income in your tax return. Well, obviously not all of the receipts in your bank statement is taxable income. So as long as you make a note, it's just much easier to obviously then come back to HMRC and explain exactly what those figures are for. And all of your expenditure, all your business expense transactions, they need to be recorded and backed up by a receipt. If you're using cloud software, that's exactly what that will do. It will keep a record of the expense, and a photo of the receipt is sufficient to back it up. If you're not VAT registered, you can literally just use a spreadsheet, keep a record of the expenses. We have a template for that, and just staple the receipts that you have got behind that. So that's sufficient to record your business expenses. In terms of your business expenses, for you to claim an expense as a business expense, it needs to be it needs to be recorded and backed up by a receipt. It also needs to fall within the definition of a business expense. So that is an expense that is wholly and exclusively for business. Please note it doesn't include the term necessarily. So once upon a time when my barrister clients did travel for work, effectively if they decided to take a first class train ticket for all of their travel, it's not for HMRC to turn around and say, well, actually, you could have just gone standard class and disallow it. So, so the term doesn't include the word necessarily. And that's likewise if you, I don't know, rather than walking from chambers to court, which is obviously the most healthiest option, you decide to take a taxi every day, then it's not for HMRC to turn around and say, well, you could have walked, so we're going to disallow that expense. So in terms of the wholly and exclusively definition, unfortunately, that excludes any entertaining costs. So if you did have the opportunity to take a solicitor out for a drink or for lunch to generate some work for your practice, that would be disallowable expenditure. Likewise, if chambers charge you for, it'd be lovely to be able to have a summer garden party, maybe this year, then that would also be disallowable expenditure as well. What I'm going to do now is just go through all of the various business expenses that you can claim to offset against your income. The main ones invariably when chambers start charging you will be chambers rent, clerk's fees, chambers contribution, however they structure it at your set, and any other rechargeable expenses that they also charge you as well. Before we all went into lockdown, travel was quite a large cost for a lot of my barrister clients. Travel is allowable from your main base of operations to another place of work. So historically, before we were in lockdown, chambers was usually my, especially my pupil clients and my younger clients' main base of operations. So you could only claim for your travel from your home to court, chambers to court, and court to home. Travel directly from home to chambers and back again would be disallowable expenditure. At the moment, all of my clients, their home has become their main base of operations. So if they have had to travel at all, then all of their travel for business from their home would be allowable at the moment. And if they've had to pop into chambers just for the odd occasion, maybe for an online hearing, or then that would be an allowable business expense. Travel would include public transport, trains, taxis, buses, etc. Many of you may use a motor vehicle for business travel. If you do, HMRC expect you to keep a mileage log of the business miles you travel in the vehicle, compared to, so we can arrive at a business use percentage for the vehicle, so compared to the total number of miles driven during the year. And you would need to keep a record of all of the overhead running costs of the vehicle, so petrol, parking, insurance, repairs and maintenance, service, MOT, all of the costs associated with the vehicle. And depending on how you own the vehicle, whether that is a motor vehicle that is bought outright or via a hire purchase or leasing, then you do get additional tax deductions based on how you've purchased the vehicle as well. Just to note, the more environmentally friendly your vehicles are, the higher the tax deductions are for the use of the vehicle. You can also claim if you have to stay away for work, so hotel costs. You can also claim for subsistence, which is not your breakfast, lunch or dinner, but it's an occasional snack that you've had to take because you're working unsociable hours. So if you've had to get up earlier than you ordinarily would to get to court, and you've grabbed a coffee and a croissant on the way in, or you're coming back late and you've grabbed a snack or a sandwich, then that would be an allowable expense as well. If you use a bicycle for business travel, then it's an extremely healthy way to reduce your tax liabilities. You can claim, I think it's 25p a mile for the business miles that you cycle for work. Other expenses that you can claim for many of you will be using your home as an office. On the cash basis, the revenue are quite prescriptive in how much you can claim for working from home, and it's all based on the average number of hours you work per week from home. Before lockdown, on average, most of my clients were working between 12.5 and 25 hours per week from home. So the revenue aren't particularly generous. They allow you to claim £18 a month as using your home as an office as an expense. At the moment, all my clients are working more than 25 hours per week from home, so they can claim a whopping £26 a month as an expense. Other expenses you can claim for are all of your office administration costs. So many of you will use your mobile phone for business, so you can claim the business use percentage of those mobile phone bills. Likewise, you can also claim for the cost of a home office landline or internet connection that you use for work as well. I was once discussing the figures that my client was claiming for his internet costs. He wanted to claim for 100% business use of his internet at home for work. So I sort of just asked the question whether he used it at all for sort of personal surfing at home, and he said no, he did all of that on the chambers when he was in chambers on their internet, and just used his home internet for work. Other expenses, there will be any writing materials, printing, postage, stationery costs, any computer running expenses, so the hardware costs, laptop, iPad, computer, you are able to have 100% deduction for those costs in the year that you incur them. Likewise with any other running expenses, so any software and peripherals. There will be all of your professional costs, so any research books, journals, newspapers for the law reports, any subscriptions to any professional associations, and the Bar Council, your practicing certificate, any other legal associations. Your indemnity insurance is also an allowable expense. Any training and CPD course costs incurred subsequent to the commencement of your second six. Court attire, a wig and gown is an allowable business expense, as are collars, cuffs and bands. Suits, shirts, shoes that you purchase for your business for income tax purposes, unfortunately, they are a disallowable expense. I don't know that much case law, but effectively there was a case Malaloo versus Drummond, and it was found that the court attire, there was a duality of purpose to the court attire. It kept the female barrister warm, decent and clothed, as well as for her business. So HMRC disallowed the cost of her court attire. Other expenses, accountancy fees, which is an expense dear to my heart. Other expenses, any bank account charges, interest incurred on a business account. And if you do have to take out any business development loans to assist with cash flow, once you've started trading as a barrister, the interest on those loans would be an allowable expense as well. There will be sundry expenses. You might buy a wheelie bag for files, folders, or a home office desk lamp. To recap, you'll have your income, less all of your various business expenses will give a profit. If it doesn't, you might want to think of another career to pursue. And then deducted from that profit figure will be your tax-free personal allowance. So the first £12,500 worth of your profit is tax-free. The next 37,500 pounds worth of profit is taxed at 20%, and anything from 50,000 to 150,000 profit is taxed at 40%, and anything above that is taxed at 45%. Once your profits are over £100,000, you start losing your tax-free personal allowance. So by the time your profits are 125,000, you've totally lost your tax-free personal allowance. So it's a really painful level of profit to actually be taxed on. On top of that, you have to pay your Class 4 national insurance contributions, which are currently 9% on profits from 9,500 to 50,000, and anything above that, greater than 50,000, is taxed at 2%. On top of that, if any of you have outstanding university student loans, then you actually make your one-off student loan repayment each year when you pay your tax each January, and that is paid over to HMRC, who pass that repayment over to the student loans company. So depending on when you took your student loans out, I'm assuming most of you will be on Plan 2, so you don't start paying back your student loan until your profits are greater than just over 26,500, and you'll pay back 9% of your income above that figure. And some of you may have postgraduate student loans as well, and those repayments kick in at profits more than 21,000 at 6%. Okay, so if there's one thing you take away from this presentation today, it should be my golden rule. And the golden rule is you need to be putting money aside for tax into a separate interest-bearing account, not to be touched until the 31st of January. From my experience, it doesn't matter how successful you are professionally as a barrister. If you don't follow the golden rule, it doesn't matter how much money you earn. I've seen, unfortunately, over the years, many clients come up unstuck because they haven't put enough money away for tax as they've been receiving their income. For most barristers in their first year, so for an average barrister, if your profits are sort of between anywhere up to about £30,000, I would recommend you put away at least 20% of your anything you receive from your second six onwards. That would include your second six pupillage award and any cases you receive payment from, and that would easily cover your tax liability in your first year. We always advise our clients exactly what percentage of their income they should put away as their practice develops, and how much money they should have in their tax account based on their profits that they've generated as well. Once you are VAT registered, you need to put away 20% of the VAT that you receive into a separate account, and 20% of that receipt for tax. So effectively, once you're VAT registered, you're putting away 40% of whatever you receive for tax. What I'm going to do now is just illustrate and explain to you when most of you will pay tax and how that tax is actually paid. So I'm assuming for the purposes of this example that most of you will start your second six around April of this year, and your first accounts will cover the period from April 2021 through to April 2022, and we call that the 2022 tax return, and that needs to be submitted by the latest 31st of January 2023, when you will make your first tax payment. So in January 2023, there are two elements to that tax payment. The first element is you have to pay 100% of the tax that you owe for your first year. And then on top of that, you have to pay another 50% of whatever that 100% figure is as your first payment on account for the next tax year. So unfortunately, the first time you ever pay tax, you have to pay 150% of the liability. You will have earned a year and a half's worth of income by that stage. So as long as you're putting enough money aside, then you will be able to make that payment. The next time you pay tax is on the 31st of July 2023, and you make your second 50% payment on account for the next tax year. So you'll pay it in July 23, and it'll be deducted from your January 2024 liability. When we get to the second year, so for most of my barrister clients, their profits will have increased, so their second year's profits will be higher than the first year. So when we get to the second year and the tax payable in January 24, effectively you would have made two payments on account of a second year's higher liability. So those two payments on account won't quite cover the second year's total liability. So there will be what we call a balancing payment, a catch-up payment, and that's the difference between the second year's total liability and the two payments on account that don't cover it. And then in January 2024, you'll have to pay your first payment on account for the next tax year, and that will be half of your second year's higher liability, and it moves on each year on that basis. At Silver Levene, we actually use a sophisticated tax planning technique by extending the period of your first set of accounts. So rather than your first set of accounts being 1 year, they would actually run from the date you start your second six pupillage, assuming that is in March of this year or April, and it would run through to the 30th of April 2022. What that does, it's very complicated to explain exactly how it works in this forum, but if I did obviously have the opportunity to have a face-to-face meeting with you, I would explain exactly how that works. But what it does, it provides you with a significant ongoing cash flow advantage throughout the course of your career, and it also opens the window for any tax planning by an extra year, so you get an extra year to know what your future tax liabilities are. Okay, so in terms of financial planning, many of you won't be in the position that some of your friends will be, i.e. they are an employed position. So if they're ill, their employer may pay them some sick pay and also maybe contributing to their pension as well. So there's just 2 points that I want to mention at this juncture. And one is that unfortunately, we all need to put money aside eventually for when we retire. For most of my junior barrister clients, pensions aren't at the forefront of their priorities when they first start at the bar. Most of you will have outstanding student loans and student debt that you'll want to repay as soon as possible. And usually the next priority for my clients is buying a property. So pensions come slightly down the priority list. But there are, at the moment, if there are any changes in the budget next week, there are tax advantages of putting money into a pension. So for every £1,000, for example, you put into a pension as a basic rate taxpayer. So if you're just paying 20%, your profits are less than 50,000. For every £1,000 you put into a pension, the government tops that up and they put £250, your basic rate of tax, into the pension. Once you become a higher rate taxpayer at 40%, for every £1,000 you put into your pension, the government tops it up by £250, and then your higher rate relief will knock £250 off your actual tax liability the following January. So for a net cost to you of £750, you've got £1,250 into your pension. You can also, it might be worthwhile, even if you don't want to contribute to a pension straight away, if you open a pension, the difference between what you are allowed to put into a pension each year based on your level of profits. So depending on how high your profits are, your pension contributions and the tax relief that you receive on them can be restricted. So the maximum you can put in is 32,000 net, and that reduces to 3,200 when you're a higher earner. So if you open a pension, even if you don't put anything into that pension, the difference between what you could have put in, the maximum, and the amount you did put in, that can get carried forward for up to 3 years into the future as unused pension relief. So it may be, if they don't change the tax rules in the budget, if in 3 years' time you're earning significantly more money, but in theory the amount you can put into a pension is restricted, then you'll have this unused amount brought forward and you can use that, and at the moment get the tax relief on the pension contribution. The other point I want to make is just about income protection insurance. Unfortunately, hopefully none of you will be in a position where you have an accident or are too sick to work. But if you do have dependents, a family, a mortgage, then you do need some form of income protection insurance to kick in if you are unable to work for a prolonged period of time. For most barristers, it can be quite cost effective to take out that insurance, because once you are trading, you will have built up some age debt, so you can probably delay when a policy would start paying out. You might have to be off work for 3 or 6 months. So, but you do need to look into things like income protection insurance, and then you may want to look into critical illness and life insurance as well. But that's slightly outside the remit of an accountant, so I just wanted to point those things out to you now. Also just want to quickly touch on how to structure your bank account. So I think you should have effectively 3 bank accounts. One would be your business account, where all of your barrister income and your business transactions would flow through. You would have a second account, savings account, that you would pay your VAT in as you receive it on a monthly basis, and the 20% for tax. And then you'd have your own personal account where your normal personal expenses would come out of. So I think just from for operating just logically going forward, if there's ever an HMRC inquiry, you know all of your business transactions are captured in one account, but also if you're going to use cloud software going forward, it works much better and it's much more efficient if you just have one account where your business transactions go through. It may be that you use a credit card as well, and I'd just try and keep that to business transactions as well. I just at this point just want to mention Silver Levene's offer to our new pupil barrister clients. We do have a first year free offer in that we will prepare your first main set of accounts. So that's from March or April 21 to April 22, and the 2022 tax return at no cost. And we'll also register you for self-assessment and VAT for free. All my contact details are on this slide as well. At this point, I thank you all for your attention, and just pass over to Clara to answer any questions that any of you might have. So I'm going to stop sharing.
Great. Thanks everyone, and thank you for your questions. So I don't know if Mason, have you got the Q&A tab open?
I have.
Great.
So
are any leaping out at you?
There's 30 questions, so I'll try and just sort of I'm not going to do them in any particular order, but I'll try and pick out ones that hopefully will relate to most of you. So I've had a question, I guess it just relates to how one sets up initially, whether you're a sole trader or a limited company. At the moment, I don't know that many chambers that have set up that allow their tenants at chambers to actually trade through a limited company, because they actually have to amend the chamber's constitution and also the way that the billing is set up for barristers. And the real advantage, and that this may change in the budget as well, of having a limited company, one is obviously there is limited liability, but you obviously take out professional indemnity insurance, so that should sort of mitigate the risk on that side. But a company is mainly used as a tax deferral vehicle, and unfortunately most of my barrister clients actually pretty much use all of the income that they generate each year, if not more than they actually generate. So there's no tax advantage then if you're pulling all of the profits out of the company each year. So as I said, all of the barristers that we act for that are mainly that are tenants at chambers, they all trade as a self-employed barrister.
Great. We've had a couple of questions about the slides. Are you happy for me to share them after, definitely, so we can just cover that one quite easily? That's great.
Sorry, the questions about the slides.
The slides that you provided, the presentation, would you be happy for me to distribute them with the attendees?
Yeah, that's not a problem at all. There's a couple of questions on fees, accountancy fees, and what basis our accountancy services billed for. So at our firm, all of our fees, which I think is the most fairest way of doing it, they are purely based on the time that my accounting and tax colleagues spend on your accounting and tax affairs, and we will complete electronic timesheets specifically for that purpose. But we always provide a quote for our fees when we have an initial meeting, and we offer an initial no cost, no obligation meeting face to face with myself or one of my other my other partner, Peter, that specializes with barristers. So that is no obligation, and we'll always quote before we do any work. But generally, our fees are always based on the time spent on your affairs, not on how much you earn in a particular year, which has no relevance really in terms of how much time we spend, apart from when you move from the cash to the earnings basis, when it just takes a bit more time to calculate your income and chambers cost figures on that basis. I've got a question on, I think it's, so it says voluntary and compulsory tax. If you earn under 85,000, then does that mean you do not need to be VAT registered at all, in which case don't need to pay taxes? Sorry, so effectively for VAT, you only have to VAT register once. It's compulsory to VAT register once your turnover exceeds 85,000. So you can trade as a self-employed barrister and be below that threshold. So you wouldn't ever, if your income didn't go over that threshold, you wouldn't ever have to register for VAT, but you will still pay income tax on the profits that you generate from your self-employed barrister trade. I hope that makes sense. I've got a question on paying off the student loan. Yeah, so when, as a self-employed barrister, you just need to let the student loans company know that you're starting to trade as effectively as a pupil barrister, and you'll be self-employed. So effectively, when you file your tax return, there is actually a box on that tax return that details the student loan that is being paid as part of the tax you pay each January. So that will be detailed on your tax return, and then that figure is transferred to the student loans company. When you're employed, those student loan repayments are taken directly from your salary each month. So as long as you let the student loans company know you're going to be trading as a self-employed barrister, then they're not going to start chasing you for payments. The first time you'll in theory make a student loan repayment is with your tax in January 2023 for most of you. I've got a question on noting briefs. So the only so any income that you receive in your first 6 from noting briefs, that is taxable income. The only element that is not taxable income is your first 6 pupillage awards. So if you do carry out a few noting briefs during your first 6, then that would actually have to be recorded, and that would be detailed on a tax return form. Okay, there's lots of questions.
Whatever
okay.
you have time for, guys.
Okay. So no, that's fine. That's good. Questions are good. Okay. Are you taxed on any earnings received from clients during the first 6 noting brief? I've covered that. So that is definitely taxable income when you receive it. Hopefully your income in that particular tax year might be below your tax-free personal allowance, so that those noting briefs, if they fall into maybe the current tax year to the 5th of April 21, then that may be below your tax-free personal allowance. There may be no tax to pay on those noting briefs that you receive anyway. There's a question, as a self-employed barrister, is it financially better to purchase a car outright or lease? It's a good question. Effectively, everyone has a different attitude in terms of how they want to purchase a car. I don't know that many people that sort of purchase cars outright. From my experience, they usually purchase via HP or lease. It doesn't make too much difference from a tax perspective which way you do that. You've just got to sort of purchase a car that obviously works for you in terms of the running costs and what you use it for. Yeah, I never say to my clients either buy a car HP or lease. The one point is, if you buy an electric vehicle, you get 100% deduction. So if you buy that HP or outright, you get 100% deduction based on the value of the vehicle against your profits. So I once had a fairly successful barrister who bought a really nice Tesla car and deducted, literally it knocked off about £80,000 from his taxable profit for that year. So that was a good way of buying a vehicle, really. In terms of subsistence, is there a definition of unsociable hours? I think it's just if you're getting up early to get to court, to travel to a court from a sort of a distance, rather than just sort of the normal commute into work, then I would sort of take that as a sort of unsociable hour. And if you're coming back late, I guess after 5-6 o'clock, then I think that would be outside sort of normal working hours, really. Are any business-related expenses recoverable if we incurred them during our first 6, e.g. joining a professional association during our first 6, or buying textbooks or computers specifically for practice pupillage? So the general rule is you can't really claim back expenses that you incur in your first 6, because your first 6 pupillage award is not taxable. So that's the sort of way it works. But if you do buy any what I've deemed assets, so that would be textbooks, that would be a computer, desk, chair, wig or gown, then we would actually claim for the cost of those assets in your first set of accounts, even if they were purchased in your first 6, or even if a computer was purchased just prior to pupillage, but you're using it in your business going forward. So generally you can't, but for assets you can. Professional associations during your first 6, we wouldn't claim the cost of that in your accounts if it's incurred in your first 6. I hope that's answered that question. Another question: if I bought a second-hand desk from Gumtree, does that mean I can't take it out as a business expense? It doesn't matter really where you bought the second-hand desk from, as long as you have some sort of record of that purchase, whether it's an amount going out of your bank account, or if you can get a receipt. Obviously it's slightly more difficult if you've paid cash for a particular item and not got a receipt, then that's a bit more hard to sort of evidence. But if you can get some sort of record or receipt, then if there is ever an inquiry and that expense is questioned, then you've got a backup for the cost of that particular expense or asset. I hope that's answered that question. If you incurred an expense in the tax year prior to starting pupillage, wig and gown, can you still deduct in your first tax return? That comes back to it's classed as an asset, so yes, you can. The next question was on travel. You can't claim for travel from home to chambers. Yeah, that it really depends on where your main base of operations is deemed to be. So in this particular example, if your main home is outside London and you rent a room in London to Monday and Friday only, is this an allowable expense? So there's a couple of questions there. If you are literally traveling from your home to chambers every day and spending time in chambers and then going to court, and chambers is your main base of operations, and you're only really working from home from a few hours in the evening and maybe even a couple of days on the weekend, then chambers, HMRC would deem that to be your main base of operations, so you wouldn't be able to claim for your travel from your home to chambers. If you rent a room in London from Monday to Friday only, it's a good question. We would probably bring in a proportion of those rental expenses, probably not all of them. If we claimed 100% of those costs, it's as if you're living and working from that home office. So we would probably claim for a proportion of those costs, and then travel from your main home outside London to a property that you're renting to work from in London. I wouldn't claim that. I don't think that would be allowable as a business expense, that travel element from that one place of home to, I guess, another place of home where you're working from. So there's a bit of a grey area, I think. Do we have to ask for and keep receipts for petrol? That's a good question. I would keep those receipts. Yeah, definitely. Next question, does the 50% payment on account on the first tax bill still apply if we are currently registered as self-employed in a different profession? E.g., I'm registered as a tutor, but have not paid tax yet as I've never been over the threshold. So the 50% payment on account is only relevant if your previous year's tax liability is more than £1,000. So if you were a tutor and your profits were more than 12,500, so more than your tax-free personal allowance, and you were paying tax in the, say, for the 1920 tax year, in theory, if your tax liability was more than £1,000, you would have to make a payment, a 50% payment on account for the April 21 to April 22 tax year. If you haven't been over the threshold, then you're not required to make payments on account. I hope that's clear. Next question. If VAT registered, would you recommend keeping VAT paid by clients in an account that is separate from the account we use to save money for income tax bills? It's really up to you. I don't think it makes too much difference. The VAT that you're collecting, you're going to be paying that over on a quarterly basis, whereas and the income tax bills, in theory, once you start paying tax, are going to be paid every 6 months. So it's up to you if you want to have two separate accounts, one for VAT, one for tax. I don't have a sort of a reason not to do that. If you'd rather just have it all in one account, then that's not a problem at all either. Have you mentioned property and mortgage costs? In your experience, is it difficult for pupil junior barristers to secure a mortgage? Sorry, I've missed that. To secure a mortgage given the lack of a guaranteed future income. So it's a good question. I'm not obviously a specialist a mortgage broker, but we do actually use a mortgage broker. I recommend my clients to a mortgage broker that specialises with barristers, and they know exactly where to go to which lenders for more early stage barristers. So we have done, we do projections for barristers if they need a projection of what their likely income is for the next 12 months. We can do projections for mortgage lenders. And obviously, if you've got at least 1 year, that's very helpful. And 2 years worth of accounts would obviously open up more mortgage lenders and more favourable rates, from my understanding of how that works. But I do have pupil and junior barristers that do apply for mortgages. If you, okay, so I'm just going to the top of these questions. If we sign up to your services, do services include any advice for dual nationals? I'm a dual UK-US national, and I have no idea what I'm meant to declare to the US, or whether I'd have to pay someone to advise me on the specifics. So We are specialists in UK tax. We are aware of certain obligations that our dual UK or US nationals have for reporting to the US. We have an individual that specialises, not at Levene, with US tax returns, so it's slightly outside of the normal sort of area of services that we provide. So we would recommend you to a business that specialises with US tax returns effectively. So that's slightly outside of the sort of normal services that we provide to our barrister clients. Okay, that's a good question here. What should we be asking accountants on our first meeting consultation? For me, I think one of the most important things is that you want to appoint an accountant that you feel you are going to have a good relationship with, that is contactable and is going to provide responses to any queries or questions that you have in an extremely timely manner. So I think it's important to find out exactly what level of service an accountant is likely to provide. We provide a very personal service, so I actually see all of my clients when we have finalised or drafted their accounts at the end of the year. I go through all of those figures with my clients and go through their tax liabilities, and also look at any tax planning that we can do depending on the opportunities at the time. So we have that face-to-face meeting. Hopefully it will be in my office again later this year. Unfortunately, I haven't seen any of my clients face-to-face for a while, but we have that face-to-face meeting at the end of the year, which is really important to dedicate an hour of your time to your own personal affairs. So really important to find out what level of service the accountant is providing. And also we are specialists with barristers, so if you're using an accountant that might be a bit closer to where you live, or recommended from a family friend, then if they don't deal with barristers on a day-to-day basis, I think there's certain things that they potentially will miss. And also importantly, what their fees are as well. Hi there, I was wondering how it works with claiming VAT back when you have bought a car. Is it possible to claim the VAT back where the asset was bought partly for business purposes and partly for personal purposes? Really good question. Unfortunately, you aren't able to claim back any of the VAT that you purchase on a vehicle that you use for work. So you can't claim the VAT back on the purchase of a car for work. Okay, I think I sort of jumped to this question earlier about why is it that most barristers are practicing as sole traders? I think it's just that chambers aren't necessarily set up to accommodate barristers trading as their own limited company and being a member of chambers at this point in time. Although I'm sure if a number of barristers at set all decided they wanted to trade as a limited company, then that would be a conversation they'd be having with the management committee at their set. What is the VAT situation for barristers providing services from abroad? So my assumption is that you are a UK registered barrister providing your services through a UK chambers, although you may be working abroad or actually out of the UK when you're providing those services. So if you are VAT registered, then you would need to, depending on where your client is situated, you would need to either charge VAT or not charge VAT, depending on the specific circumstance. And normally the clerks at your chambers should be up to speed on when and they shouldn't charge VAT on your fees. But as if we were your accountants, as your accountants, if you've ever got a sort of query or question about that, then we're always happy to assist in any way we can. And we do have clients that come to us with various VAT issues from time to time. The question, I'm not quite sure I've quite got it. It's in terms of our accountancy fees if we were to handle the books for a second six pupil. So we don't charge for the first main set of accounts and first main tax return, which covers from when you're a second six pupil through your first 12 months. It may be that some of you commence before the start of the tax year, so you start before the 6th of April of this year, and it may be that you may need to file a 2020-21 tax return, and that would detail any sources of income you've had between April 20 and April 21. And if you've commenced maybe at the beginning of March of this year, then there will be an element of your profit from your first set of accounts that will actually be taxed in the 2020-21 tax return. So there's potentially, if that is the case, we do charge a fee to do that tax return for you. Okay, financial planning. If you have multiple pension pots from previous employment, will Levene be able to help consolidate that into one pot? Okay, so although I talked about the benefits of putting money into a pension and the tax advantages, we are not independent financial advisors, so we aren't able to recommend where you actually put your money in terms of investing in a pension. We do have independent financial advisors, again, that specialise with the bar. They are called Fleet Street Wealth, and they would be able to advise you on that side of things. Okay, what happens if you are already registered for self-employment? So if you're already registered for self-employment, you will already have a unique tax reference number. So you actually will just be notified to file another tax return, and then there will just be an additional trade on your tax return, so you don't need to re-register for self-employment effectively. Okay, if we have a pension through our former employer, are there any advantages to setting up a separate pensions account for self-employed earnings? Again, that would be a question that I would defer to my colleague outside of Levene, who's an independent financial advisor. But going forward, if you're going to be putting money aside for a pension, then I think the advice would probably be to start a new pension going forward. Okay.
We have a couple of questions, Mason, generally sort of ballpark figures of after the first freebie year.
Okay, yeah. So after the first year, our fees are never usually less than £695 plus VAT, and they're never usually more than £750 plus VAT. And that would include preparing your year-end accounts and your tax return, a meeting with a partner, and any generally sort of ad hoc advice that you would need during the year.
Lovely.
I should also point out, depending on who does your VAT and your bookkeeping, there may be additional charges to deal with that going forward. So some chambers, fortunately, will actually have someone at chambers that will complete and submit your VAT returns for you. But I think for most barristers, I usually find that the responsibility for completing and submitting those VAT returns falls on their shoulders, and then they can ask us to do those VAT return forms for them. If you are going to use cloud accounting software, there are different softwares on the market. Xero, if you get that through us, it's £15 a month plus VAT, which is cheaper than actually going directly to Xero. The advantage of using Xero is that all of the transactions come into the software on a daily basis, but effectively at the end of the year, when you need to prepare your accounts, or the accountant prepares your accounts, you don't need to provide them with any more information. It's all captured in there. So you're not having to sort of reinvent the wheel. If you're doing your VAT returns on bridging software, then you're going to have to give the details of what's on the VAT returns to your accountant, and then details of any other expenses that you've incurred during the year as well. So there's just a bit more work to do at the year end to get that information over to your accountant. Also, it has been delayed previously, but Making Tax Digital for income tax is scheduled to come in. It's not for a while now, but it will come around quickly, April 2024. And that will mean that potentially you'll have to file quarterly figures for income tax purposes as well. So if you're on software such as Xero, then that will already be geared up by the time we get to that point to actually submit those figures quarterly for income tax purposes as well. Okay, there's a question. Thanks for your answer. Are there tax benefits of registering as a company if Chambers allows this, as you would be liable for corporation tax by a lower rate than income tax? That is correct. Corporation tax is currently 19% on the profits from the company. Whether that changes in the budget that's about to happen next week, who knows? But effectively, when you take money out of the company, which is normally structured as a sort of basic salary, and then anything above your tax-free personal allowance comes out as a dividend, you do pay extra personal tax when you take that money out of the company. So if your profits, so dividend income or any other income that you receive in the tax year is below 50,000, then the dividend rate, the first couple of thousand is tax-free, but anything above that up to 50,000 is taxed at 7.5%. So you're paying that on top of the corporation tax as personal tax. And as soon as you go over 50,000 personal income via dividends, then that goes up to 32.5%, and then goes up higher once you get past 150,000. So it doesn't make, it's not sort of more tax efficient to be in a company if you're pulling all of the money out each year. If you don't need all of the money that you're generating in the company and you want to keep the money in the company, maybe do some investments within the company, or just build up that profit in the company, then you will pay lower corporation tax rates. But for most of my barrister clients, they do need all of the income they generate each year. So even if they did have a company, they'd be taking all of the money out. So they've been incurring large amounts of personal tax as well. Regarding that, is the £85,000 turnover gross or net? So that 85,000 is excluding VAT. So yeah, so that's excluding VAT. That is just on your actual fees received. Is quarter time included as business expense or not? Got confused with the case law point. Good question. So I did mention that for VAT, you are legitimately allowed to claim back 100% of the VAT that you've incurred on a suit, blouse, skirt that you only ever wear for work. So for VAT, you are allowed to do that. But for income tax, suits, shirts, shoes are actually disallowed. So you can't claim those for income tax. So there is a disparity between how they're treated for income tax and VAT. What you can claim for income tax is the cost of the wig and gown and any collars, cuffs and bands. if I've already bought my wig and gown and starting pupillage in September, can I claim for it? Yeah, that would just, if you've already bought it, I advise you all just to keep your receipts for these things, but they would, although it's purchased prior to when you start your second six, because it's an asset, we can bring that cost into your first set of accounts. So a question here, apart from the barrister trade, I'm also a commissioned officer. Can I claim kit purchased for my military role as an allowable expense? So my understanding of this is that as a commissioned officer, that is a salaried pay-as-you-earn type employment rather than self-employment. So the definition of an allowable expense when you are employed is slightly tighter than when you're self-employed. So I, in all honesty, don't know the answer to that question. It is worth, because obviously that kit is specifically for your role. Yeah, in all honesty, sorry, I don't know the answer to that question. But if you drop me an email after this presentation, I can obviously just respond to that to give you the answer. Very, very happy to do that. Can you advise on the situation for barristers who wish to provide barrister services in the UK but live abroad in the EU? Who will we pay that to? So this is all getting fairly complicated because there will be VAT and also income tax issues when you are resident abroad but trading as a barrister in the UK. So potentially, depending on the residence where you are deemed resident, that will dictate where potentially you are taxed, and you could be taxed on some of your income in two jurisdictions. It could be the UK and it could be where you're living as well. There will be no doubt double tax agreements between the two jurisdictions, so you won't pay double tax, but you could end up paying a top up depending on who has the higher tax rate. So fairly complicated, and we want to give that advice, I guess, specifically when we know a bit more about where you're living, okay, in the EU, but also sort of how that exactly is going to work going forward as well. I have got a client that has literally recently moved out to Germany, is trading as a barrister from his UK chambers, and is also then going to be travelling back to the UK. And I've got other clients that live and trade from abroad as well. So that's not anything that we're not used to dealing with. Okay, probably potentially an obvious answer to this. Presumably by using an accountant, you save money both in real terms and in time. So without giving any sort of sales pitch at all, from clients where they have historically either decided to do the first year themselves or even done a number of years themselves and then come to me, I've always looked at what they've done. They've not always set up the first period of account to the right date to get this cash flow advantage going forward. Sometimes they've missed opportunities in terms of the actual level of expenses and the ones that they're actually claiming. And also they've missed some sort of tax planning points as well. When I meet with my clients, depending on their level of profit, I can advise them what a sort of an efficient level of pension contributions would be. It might be to call back a tax-free personal allowance, things like that. So any accountant worth their salt should, without doubt, obviously save you time, which is time in your business is money as well. You could be earning more actually in your trade, but also I wouldn't have the clients and that we have at the practice if we weren't saving them real money as well, over and above the fees that we are charging them. So yes, we would 100% save you money in real terms and in time.
We're just coming up to time now. I don't know, have you got time for a few more questions, or should we have one last one?
I'm happy to just answer. I think there's only 6 left, so
Brilliant.
not a problem at all. I'm happy to answer those questions. What if you are legally registered as living abroad and provide your services as a door tenant to chambers in the UK? Do you have to pay income tax in the UK or register for that in the UK? Abroad and provide your services as a door tenant to chambers in the UK. It really, it's a complicated question. I think I probably want to just leave that for sort of a face-to-face meeting, just to find out exactly where you are living and just time spent in the UK or and where that work is necessarily being generated from and actually done. But yeah, as soon as you are working abroad, it just, it complicates things slightly. You mentioned that some of your clients are trading as self-employed and under a limited company. Is there an arrangement or advantage for a barrister to be registered with chambers as self-employed but set up as a separate limited company to also trade under? So generally, from my experience, what I've seen is if a barrister wants to offer slightly different legal services than what they would normally offer directly as a barrister through chambers, so they may set up an alternative business structure with potentially a few other barristers, then there's nothing stopping you having your self-employed barrister trade through chambers and a separate limited company for you to trade either as an alternative business structure. I'm not sure, I don't normally have clients that would have part of their sole trade as a barrister going through as self-employed and then also a separate limited company. They usually set up a limited company for a specific separate business proposition, business purpose, rather than anything to do in relation with the work they're doing through chambers. Do you get notification to file return online or by post? At the moment, you get a notification to file your return by post, and we always obviously remind our clients to make sure, we make sure our clients file their tax returns on time. Is your personal allowance separate from a dividend allowance? That's correct. So your first £12,500 worth of your income is tax-free, but any the first £2,000 of a dividend is tax-free on top of that as well. Are you, your partners, able to help with arrangements for income from sources on top of the bar, e.g. a landlord collecting rent? That's another good question. We have lots and lots of clients that have multiple sources of income outside of their barrister trade, and we have lots of barristers that own a number of properties that they rent out. So we prepare the rental accounts and also incorporate that into their tax returns as well. So that's not unusual at all for us to see that, along with other sources of taxable income that our clients generally have. With regards to claiming back VAT for suits, some argue that it's disallowable as you wear the suit outside work, therefore not considered as uniform. Is there a separate rule for barristers? It's just regarding the VAT on the suit. If you only ever, so I guess I think the point is if you only ever wear it for work, if you even wore that suit once for maybe, I don't know, a wedding or for something else, then in theory, you wouldn't be able to claim the VAT back on that suit. So it can only be used for work. Okay, I think that is all of the questions for future careers.